Hey, what's up, guys? So I just wanted to share a little bit about the tools that I'm using at the moment, and then how it's benefiting me in my trading. So let's talk about this top chart. So the first thing I'll point out is this bloodhound indicator that I'm using, and it tells me the length of the swing. So this one is 4 points. How much volume is traded? So 8.5K. The price at the high of the swing, which is 35.36.25. Excuse me, 31.36.25. And I can't remember that 31.36. Yeah, same price there. I don't know what the 5B is, but basically, it helps me to gauge kind of what the current ebb and flow is. You know, how far my stop needs to be, and also it's helpful in gauging my targets. Um, Right here in the top left, this is my fractal swing indicator, and basically you go into this thing and then you tell it, um, so it looks at fractals, and you tell it how many bars you want to be in that fractal. So if it's a 5, it's looking at groupings of 5 bars at a time, and it's going to gauge that you're at the top of the fractal when you have a top and then 2 lower bars on each side. So it's 5 bars. 1, 2, 3, 4, 5. And then concurrently, same thing for the downside. 1, 2, 3, 4, 5. This would also be a fractal because we have a low, and then we get 2 bars up here that are higher, and then 1, 2 bars up here that are higher. And then I've got a minimum number of ticks being set at 3 points or 12 ticks. And so that it basically spits out these figures. So when you're looking, when you're basing on those fractals, a 5-bar fractal with a 3-point minimum amount of movement, the most commonly occurring figure or the mode is 4. So that is kind of like the the average, so to speak. So, and you can, like I said, you can set these fractals as whatever you want. I'm just kind of looking at what is working best for me. So one standard deviation, or the 70th percentile of... Sorry about that.
Do you mind if I put it in the category?
I have my Discord talking right now. I apologize. So one standard deviation of this study basically is 9 points. Again, sorry about that. And then 2 standard deviations, or the 90th percentile, is 12 points going up, 15 points going down. So you can see that when we do have those impulses to the downside, they're really, really strong. And this is all based on 206 rotations. So back to where we're at. So like I said, these bands right here on my indicator, they're representing 1 standard deviation, or 1 sigma, which is 70%, and then the second band is the 90%, or 2 standard deviations. And I can see when we have a really strong impulse right there, you know that the sellers are very much in control during this period. And in terms of other stuff that I'm using right now, other than the zippers, like say if I'm short right in this area, and I know that we have a consolidation area right here, that the market is likely to get caught up a little bit in these zippers. So it's gonna move down, consolidate a little bit in this area, move down again, and then you can see it consolidated a little bit in this zipper over here. And then as we move further down, like we've got a zipper here, we've got a zipper here, and then the market got caught up in this area. And I was trying to see whether or not these levels were still valid. Like, say you've got your zipper right here, and the market traded down to it, consolidated, and then broke through. I was speculating as per whether or not that would invalidate this zone, basically having it traded through it. But you can see when we reach this zone again, we had further consolidation. So it seems like they are still relevant. I mean, like this one, although we traded right through it, when we came back down to the short side, we consolidated again. So they do definitely seem to hold some of their value. Um, and you can see these consolidation periods, they actually kind of line up with the high and low volume nodes on the volume profile chart. So right here, we've got a zipper at 3133.75. So 3133.75 is right here. And then you can see on the volume profile for today, we've got two high volume nodes right here around this area. And then concurrently, let's look at another one here. That was, let's see, that was one we just looked at. Let's look at 3143. So 3143 is actually the POC. So these are kind of like, these are kind of your high volume nodes, so to speak, and you can just kind of trade between these high and low volume nodes, zipper to zipper, and just kind of watching. What I'm doing is I'm watching my delta up here. This is the delta for the current bar, and if we're trading inside of a zipper, I will look at what the delta is doing to see which side is really trying to press it home. So if I'm in a trading range and I see like this number, the 944, say I saw that go from like 944 to 1200 really fast, then I know that the buyers are really hitting the gas and they are likely to try to break through the high volume that I'm seeing on my book map chart. So basically, when I'm looking at, let's go back a bit. My book map might have crashed earlier in the day. Yeah, I don't have data, unfortunately, for further back. Yeah. My NinjaTrader has been crashing a little bit. I think my MZ pack is just running it a little bit too hard when it was the really high volume period right at the end of the day. But what I was gonna say was that you've got your zippers or your trading ranges. Like right here, we've kind of got a microstructural range, and then you got high liquidity, oftentimes on both sides. But the side that is currently defending, so to speak, is going to have more liquidity, basically, or an imbalance in the order book on their side, because, like I said, they're trying to defend against the aggressor. And in order for that high liquidity to get broken through, you need a lot of volume. So basically, what I'm looking at again is the delta on these bars, and I'm seeing, who, like I said, who is really trying to press it home. Right now, you can see that there's looks like the shorts are the aggressor right now. But right here, we're actually going up on negative delta, so that is kind of an indication that they're not very strong at the moment. So that's basically where I'm at, and then of course I'm using my volume profile to gauge the overall trend. That's really where I start out when I am trying to figure out which way the market is going. I look at the volume profile. And I'm looking for high volume nodes, low volume nodes, and I was long in here quite a bit, and then when we got up to the top here, I actually switched to the short side and I caught a runner on this drop right here. But I mean, the overall trend is definitely up, but you can see some pretty strong rejection right here in this low volume node. So although, yeah, the buyers were in control pretty much all morning since like 8 o'clock, we kind of started to move into balance at this area. Of course, we've got the POC right here. So right now, like I would say the market is in balance because we went up and then the sellers rejected higher prices up here quite strongly. And then concurrently, the buyers also rejected lower prices. So right now, we're really just chopping around at the POC. This, I mean, you can tell that it's balanced because the volume right in this center portion is really, really high. And that's indicating that this is your balance. This is value, so to speak. and you're gonna churn a lot when you're in the value area. Not the, I mean, this is like the value area, but to be honest, I don't think that this is value up here at all, really, because the profile is quite a bit smaller. I would say from right here to right here, this is value. So right now, like I said, the market's in balance, and I'm really trying to look at the overall trend on the volume profile to gauge my bias before I'm ever looking at any of this other stuff or bookmap or the footprint chart. I think it's, for me at least, it's really beneficial to look at the overall trend and see what the market is doing, the large time frame players, before you ever start looking at this detailed stuff. Because to be honest, if you're trading off of the details and you're not taking the larger move into context, you're gonna have you're never gonna be able to get consistent, basically. But that's pretty much all I got for right now. I mean, it seemed to work pretty well today. I had a lot of good trades, and I was able to stay on the right side of the market, looking at the overall bias beforehand, and then just using the the order flow and the rotations and all that kind of stuff to really execute my trade. So that's it. That's it, though. I hope that helps. And yeah, I mean, this is pretty cool what I'm doing now, and learning all the stuff that I have been at convergent trading has been pretty beneficial. So thanks a lot, guys. Good luck on your trades, and we'll see you next time.